Welcome to Braeburn Whisky podcast. I'm Mihai, your host today, portfolio manager, and I'm here today with my clients from Splint Invest, Mario and Lars. How are you guys?
Good. Thanks for having us.
Awesome.
Hi Mihai, thanks for having us. Doing awesome, yeah. Lovely
Pleasure.
to be here in Barcelona.
Pleasure to have you. Not the first times in Barcelona for you?
Not my first time.
No.
Lovely city. You need to be here.
It is
multiple
amazing.
times,
It's a bit of a different scenery than Switzerland, isn't it?
Yeah, and we're not used to the weather, so
Yeah.
come from snowy mountains.
We usually only go to cities like Barcelona in spring times.
It's a good.
Or at least myself. So.
Exactly. It's a good the supplier sort of visit for you.
Yeah.
A little bit different than when we went to Scotland.
Yeah, I would say so.
Mario?
It's slightly different. Already the transportation from the airport to the hotel is way easier here in Barcelona than
It's not such
in Scotland.
such a big travel.
But what I miss today is the incredible limousine service,
Yeah.
which I had in
Yeah. Well, we're sorry for the next one.
Scotland.
Huh? So, like slight hint there under the table. Perfect. Well, look, I mean, I think to start off things, we'd love to know, who you guys are, what Splint does, and I guess a bit of a background on both of you.
My name is Mario. I'm co-founder and head of investments of Splint Invest. Splint Invest is an app for alternative investments. So we say it's the easiest way to invest in alternative assets. Through Splint Invest, you can buy with us or invest with us in whiskey, wine, rum, and as well watches starting from €50 only.
Yeah, so I'm an investment analyst at Splint, and at the same time I'm doing a PhD in, let's call it, quantitative finance in Switzerland. I joined last year. I joined because I was always really interested in watches, and I knew that they were a good investment case. And then I joined, and I also found out that whiskey, wine, cars, and whatnot can be great investments too.
It's a new territory for investors, especially in economic conditions like today. Most people are looking to diversify their portfolio. They're looking to put their money into something a little bit more stable, tangible, and safe. So, we started talking back in November, December last year, I think.
Yeah.
Would you mind just telling us a little bit about your, journey with Braeburn all the way back then? And I guess kind of, what made you decide to kind of start looking into whiskey as a whole, and of course, start working with myself and Braeburn.
Sure. Let's start with whiskey as a whole. So this is well how the whole Splint Invest came together, because we like the main founders who were all working at PwC in the same department.
Yeah.
And during beer we were discussing about how we can kind of bring more stability into our own portfolio. So it was right after COVID crisis, and the markets were quite volatile, and we were playing with our money on the stock exchange, and we thought, like, hey, some more stability in the portfolio would be quite nice. And so we did some brainstorming, and obviously we said, like, okay, in prior decades we had like bonds, but kind of bonds do not bring any return right now, not really inflation hedge them. So what can we do? And so we came across whiskey cask investments, and it was an Anglo-Saxon co-founder who came with that idea. So hey, I heard about that, and then we were like, yeah, makes sense, like intrinsic value creation over time. So the liquidity is in the cask, and it matures for a couple of ages, and then you can bottle it and sell it, and it gains in value over time. And so we were huge fans of that idea. So we started to make ourselves familiar on kind of obtaining casks and how this works, that's when we started to look at potential supplies for whiskey casks, and where we stumbled across the name of Braeburn first time, I think we were very much convinced about the quantitative way of Braeburn. So really kind of the term sheets which you have with a historical performances of industry, of the distillery, but as well of the overall industry as such, and that was very much what we liked, because my background is auditor based, and so I do love numbers crunching, and that's as well how we approach the whole investment cases. You always want to see kind of the data in order to justify, and that's what we liked a lot about Braeburn. And next to that, of course, it was as well you in person, so you were always very upfront, I would say, and never pushed for a sale, and were very much introducing us into the whole whiskey business, which we appreciated a lot and still appreciate a lot.
The first thing that Mario said I found really impressive, because when I started to get into the, let's call it, research into those asset classes, I was looking for data, because I'm also data driven. Wanted to create some models on the data, and I was looking and there was nothing there. Until then we talked to you and we saw, okay, they have a really nice database where we can work with, where we can also back test it against our assumptions. So this was really impressive and valuable.
But coming from an analytical mind, from auditing and kind of vetting businesses and looking at the sustainability, I guess, and the viability of investments for yourself, Lars. Looking at a PhD now. The backbone and the back history and the previous data and kind of being able to put a case together, I guess, was something important for you. And we see that with most of our investors when we look at identifying the right casks for investors. We pretty much put their needs in front of anything else. We were not a business that just has a wide sort of sales sheet or stock sheet, and we just try to get rid of that. It's more sort of understanding, what you guys are after, what your clients want to achieve, what comfort levels you're looking for, holding periods, how whiskey sits in your overall portfolio, and thereafter, making a recommendation. We're not here to push, whiskey down anyone's throats. Although we do have 2 bars in the office, but that's not our main job. We like to be a little bit more tailored and a little bit more friendlier, I guess.
That's something that surprises me too. Your diversity in the supply you have of casks, because we set up a mail, we text you, okay, Mihai, we are looking for something in that price range for that horizon. You always have it, and you have like something original, something unique. I'm really impressed by the diversity.
Well, it happens with time. Okay, so sometimes it takes a bit of time to find the right option.
Of course.
But with patience, this is a long-term game. You're not gonna see anything, any returns or any quick wins. It's a case of patience, and I think that's important to know. Looking at historical data and sales, previous sales history, it's very constant all across the board. Even going through the pandemic, now kind of recovering from that. And in the market, there's a lot of very exciting news. We were talking at the bar earlier about some exciting topics with the 0-for-0 tariff happening in the States, where there's a free flow between single malt, Tennessee and bourbon whiskey between the US, Canada, and the UK. So as a whole, we are looking at something exciting, something that we don't see declining in the future. Certainly not. I guess with your clients, they're perhaps as well as our some of our clients, they're a little bit more accustomed to investing in whiskey bottles as opposed to casks, because this is a younger market in the grand scheme of things. How have you seen these users, the interaction of these users comparing or differentiating between the two similar asset classes?
Bottles always look very flashy, so it's the easier sell, I would say, because a cask looks like, or most casks look about the same. So if you're not looking at details, but as soon as you walk them through the investment case, and also with casks, we have to talk about the history of the distillery, and as soon as you get into that, it gets really easy to sell.
Yeah,
I always say, with the bottles, we can afford the Macallan bottle to put it onto the platform, so we cannot yet afford the Macallan cask to put it onto the platform. But I think brands make as well quite a difference on that and how people perceive the asset as such. But generally, I think our clients are quite aware about diversification and the importance of diversification. So they know as well, basically, what you always tell me, Mario, you know, it's very important to have as well a diversified whiskey portfolio. So don't just go for one distillery or one region, but try to diversify as well here.
Yeah.
That's as well an awareness which our clients have, and so they appreciate having the opportunity to invest in bottles of particular distilleries, but then as well in various cask options.
You mentioned tangible assets and kind of, you know, your clients and your users really wanting to invest in something tangible. Why do you think that shift happened now more so than, you know, 5, 10, 15 years ago? Because we are seeing a lot more asset classes, art, wine, watches, classic cars, of course whiskey as well, we're on a whiskey podcast, appear and being a lot more attractive. Why do you think that is?
I would basically say because at the moment your investment opportunities as a retail investor are mainly in stock markets, and then you go to cryptocurrencies, both of them are super volatile, and I think naturally this is not really comforting. When you look at your portfolio, as long as it goes up, then definitely super happy, but the moment it starts to go down, you start to become more and more aware about the risks which are implied with those products, and you seek actively for other ways of investing. And when you then, like basically what we started to do when we started a Splint journey, so it's really about analyzing which assets out there are as well quite I would say inflation and recession resistant, and then you end up basically with physical assets like fine wine, whiskey bottles, or whiskey casks, whiskey bottles, rum, watches, cars, art. And when you look at the returns, Knight Frank is publishing them on a yearly basis, and when you look at the return of those categories, that's incredible. And at the same time, especially during the I would say rather bad market times, they're kind of stable, so they might lose as well slightly bit of value, but usually they kind of remain stable or even increase in prices. And I think that's what people are actively looking for.
Of course, we can, you know, give projected values, we can project what we think is going to happen, but we can't read the future. We can only analyze data that's happened in the past. Like with any other investment, things can change, okay? Main two risks, and these are something that we don't expect to happen, but of course we need to make our clients aware that there is a risk. There's two main ones. There's the risk of basically the whiskey market not being around long enough for when you want to sell your cask in 20, 30, even 15 years. That basically the global demand of single malt going down and your asset not being as attractive for users, okay? What does that mean to your investment? It means that on exit, you won't be able to get the premium that you would have expected 15 years ago, 20 years ago when you invested. Now, does that mean that you're going to lose money? Possibly not, hopefully not, because in 15 years' time, you'll have a 15-year-older whiskey. Look at a simple 10-year-old bottle in your local whiskey shop and compare the price to an 18-year-old bottle. And you'll see there's completely different price points from the exact same distillery. In 8 years, the price point will change dramatically. It's the same with casks. We're just talking about larger scale, okay? That's you know, a sensible risk to take consideration, although global consumption of whiskey and, you know, demand has only gone up over the years. We've gone through world wars. We you know, these distilleries still produced you know, going back to the 1800s, some even 1700s, they've still been producing whiskey. They've gone through the Great Depression, they've gone through prohibition, they've gone through global pandemic. People still drink whiskey, okay?
But that's something I wanted to touch upon also, because Mario mentioned it. I think there's two components that are really interesting. Of course, our clients are interested in quantitative elements, but what I really like about whiskey and also other assets, it's so rich in history. You can learn so much. I mean, we could probably give you one cask, put it on the table here, and you could talk for 45 minutes without taking a break. So
absolutely. And that's the thing, you know, in this office downstairs, there is so much whiskey knowledge, and we love it. My journey, started as a whiskey lover, as an investor, and then joining Braeburn because I could have never thought that you can actually invest in whiskey. And when I found out, I just absolutely loved it. So that's why our approach is different than some of the other companies. We want to be part of that journey because every single cask, from the time it's being filled to the time it's being bottled, will have a journey, and we'll have different investors, and your users, our clients will be part of that journey, and they can have an impact on the final product, which is something that you don't really have with a lot of other assets. Something a little bit romantic.
Yeah, definitely.
Yeah. So the first risk is basically market demand. The second risk is if for whatever reason your cask goes under that 40% ABV. Okay, so for those users that are perhaps not familiar with the ABV term, alcohol by volume, that means the strength of the liquid at the time of bottling. Most of the bottles are bottled at around 43%. When the cask is filled, typically they get filled at about 63.5%. Some 67, some at odd numbers, but industry standard is at around those numbers. What that means to you is that you have a finite amount of years until that cask is healthy and legally be able to call it single malt. Legally, to be able to call it single malt, it needs to be maturing for at least 3 years inside a cask, inside a government bonded warehouse, which I'll touch upon about in a second. And it needs to be bottled at least 40% ABV, nothing lower than that. If it drops, legally you can't call it single malt anymore. So you basically lost your investment. Now, HMRC, so the UK Customs and Revenue Office, basically the government, deem single malt as a wasting asset. Wasting asset definition is an asset that has a lifespan of up to 50 years. The reason for up to 50 years is because they're an element of what we call it the angel share. Okay, you've definitely heard about it, but
I smelled it.
You've also smelled it.
You've
also smelled it. But for everyone else that's watching, angel share is a term used in the industry to describe evaporation from the cask and also wood absorption. So during the lifetime of this cask, since the time it's being bottled, at the time it's being filled, up to the time it's being bottled, that liquid inside the cask will evaporate slightly, at a rate of 1-2% per year. Okay, towards the end of the cask's life, we need to make sure that we're aware of the cask conditions. So we do something called a regauge. Regauge is basically a report where we analyze the health status of that cask. So we take the regauged liters of alcohol, RLA, something that every single cask that we share with our clients, with you, Mario and Lars, have a regauge report, and they have the accurate RLA number. It gives you the up-to-date ABV, so alcohol by volume, which establishes the strength of the alcohol inside. And with those numbers, we can estimate the estimated bottle count if you were to bottle it at that cask strength in a 70 cl bottle. Okay, so even though there is the risk of you basically going under that 40% ABV in 20, 30, 40 years time, depending on when you purchase the cask, there are ways in which you can manage that. And that's all done in our warehouse in Craigellachie. So, Mario, you visited us back in May, I believe, beginning of May.
Beginning of May, yeah.
Which was a surprisingly beautiful and clear sky day in Scotland. It was hotter than it was in Barcelona when I left to come in and meet you. So it's done there. We've taken that, and I mean, perhaps you can give us a bit of an overview of your experience while we were, there, and you met Davey, you saw the warehouse, you saw some of your casks there.
Should I start as well with my dream, which I had before
the
one which I mentioned?
I had a dream.
So I think it's that's as well for our users. I think great to read and to hear about, because it really makes it very tangible, and it gives you as well really the comfort about the existence. So for me, again, with my nature as an auditor, I want to see things, and to be able to double check the numbers against a sheet, so kind of tag to floor to tag or whatever.
Mm-hmm.
And so I was very much looking forward to visit the casks and as well to meet you. It was the first time where we met in person. And as well to being in Scotland the first time, and surprisingly the weather was super nice, and so driving up to the warehouse was very thrilling for me, because I didn't really know what was expecting me. I just knew like, okay, I'm gonna see my casks, but I imagined it like we arrived there and then you see like those are the Splint casks, and they're like in one row or in one shelf, and you could go like number 1, 2, 3, 4, 5, 6. But everything was a bit different. So, and then we ended the first building together with David. David is the manager, right, on site.
He's the warehouse manager in essence. So ex-Macallan guy.
Yeah.
He's basically in charge of all of those casks. So it's an amazing asset for us to be able to have his knowledge and experience. And I think one of the key points for you was basically, meeting him and understanding the knowledge he has.
Yeah. Very impressive. Yeah. So he was really able to tell us everything about whiskey and how to store it. And then the first warehouse we entered is I went in and I had like this smell, and I was like, is something leaking in here?
Mm-hmm.
Then David doesn't. This is the angel share. So this is the evaporation process of the cask, and you had like, I don't know how many casks he mentioned, but it was 4,000.
It was thousands of them. It
Yeah,
was the new make warehouse.
Yeah.
Yeah.
It's like really thousands of casks were just in there, and I was looking at that, and it smelled like lovely. So it really smelled lovely. It was a very intense smell, and so this is kind of what one of my key takeaways from the visit is really the angel share. And then we went over, and it wasn't that our casks were just like put in line and I could look at them. So they were all like, depending on where we purchased it and the age of it, they were in different warehouses. So they're ramping up quite massively there, the capacities. And David always knew where our cask is, and then he guided us to the casks, and they were as well like lovely piled up in still like in the old way. So I learned as well that it's like traditional business. So
it's a dunnage system.
Yeah, and
what you were mentioning about the triangles,
exactly
basically,
with the wooden bars on top of the casks, and so and I thought, okay, this is like a kind of fairly modern, or they developed as well with modern technologies, and you have like kind of a semi-automated warehousing system where they would say like, okay, Splint invest cask, and then just like
we'll just bring it to you.
Exactly, the
like
machine
in the Japanese,
just like getting down.
Like in the Japanese restaurants where they bring you sushi with a
exactly.
little robot.
Exactly.
Here's your cask.
Here's your cask.
Yeah.
So and then David talk. So really the knowledge of David was so impressive. What he was able to tell us on, and as well the experience he brings with, and because I wasn't discussing, started to brainstorm. I came as well with those wild ideas about, hey, if you would want to do so, if you would see in 5 years that having now a sherry cask finish would be beneficial to our product, would that be possible? And then he was like, yeah, of course it's possible, but it always depends on which type of whiskey you have, so I wouldn't recommend to do that with any whiskey. And really crazy. Like it even went to the wood which you made the cask from, so he told me that you should be cutting them in springtime and only different times and different or particular weather conditions in order to get the perfect casks.
Yeah, how well condensed the actual particles of the wood are depending on the season and the temperature outside. So it's a full science there. I mean, I guess they teach you at the Macallan school, I don't know. But it's I mean, for our investors, that's why we brought him on board. That's why we really feel safe having our casks and our clients' casks there, because someone like Davey is in charge of them. A lot of exciting news happening, right? We talked about the American market just earlier. So in America, for those that haven't followed the news, I guess there's a 0 tariff agreed between SWA, so the Scotch Whisky Association, not between them, between the UK government, but managed by the SWA, and the US and Canada. A 0 tariff between the two, meaning that there's free flow of Scotch, Tennessee and Bourbon whiskies between the two regions, which will significantly increase the trade, increase the economy, increase the value purchases, and that, of course, for yourself, for your users, for our investors, is positive news. It is basically what we want to hear.
So that means demand is increasing and supply is basically
remaining
at same levels.
Exactly. Yeah. So demand has always been increasing. It's just a case of basically opening the doors wide to be able to actually satisfy that demand. Whereas before it was a little bit hindered because of the tariffs involved. I don't have the numbers with me to be able to quote the exact implications, but it is significant.
But you mentioned something interesting. I think the limiting capacity is with the casks, right? Or not with the actual liquid, or
in terms of supply. Yeah, absolutely. There's basically, as a whole, we're playing, in terms of investing in casks, we're playing with a very, very small number. In the grand scheme of things, 94% of all the whiskey that's being produced and distilled by all of these big players is used for blends. Okay, so we're looking at Diageo blends, we're looking at Bacardi blends, we're looking at a lot of different distilleries that put most of their production into blends, because that's where the global huge consumption is being held. So for us, single malt as a whole is quite a small percentage of liquid that's being produced, which is exactly what you want in a very solid investment case. But more so, out of that single malt percentage, we're playing with a bit even smaller percentage with regards to the trade that we're playing with on the secondary market. So all of these casks that your platform is able to offer, and we're able to offer to our clients, in the grand scheme of things, very, very, very limited number. You take that away, and you put also the fact that electricity, energy, gas, raw material needed to produce whiskey has gone up. During 2020, a lot of distilleries have either shut doors or they've limited production, which creates even more scarcity into the market. And of course, inflation, again, going back to this point, it's all contributing elements to making whiskey something attractive, because whiskey has that naturally maturing element that regardless of what happens anywhere else, in 10 years time your whiskey will be 10 years older. So as long as you're patient, being the key word here, you're onto a winner.
It's a good point, because when we observe the markets like stock and cryptocurrencies, that is something that some investors are probably lacking at the moment. So patience to really play the long game. But I think we now have a good let's call it a product that we can offer, and I think it makes sense for the clients.
Yeah, absolutely. And I think that the feedback so far from your clients have been fairly positive. Pretty much everything that you put on the platform was well received, and we've seen recently some higher sort of value, bigger names onto the platform. So what was sort of the thinking, and I guess the leap of faith that you took when you decided to put those on?
Yeah, exactly. I mean it's and I still do remember when we purchased the first casks, and when we told that to family and friends, and just they loved that idea, and they wanted to be part of that, and it's really kind of investing in something which you actually like already as a product, and it's a bit like as we mentioned before, so in case you could not materialize any profits, and you could at least bottle and drink it, and you like it and you feel attached to the product. So and in the recent couple of weeks we were able to add some quite nice brands as well.
Yeah.
And I think there are more to come, as I understood.
Absolutely, yeah. I mean, it's again patience game. So whenever those casks come available, it's just a case of basically acting quickly on them. And I think you guys have learned that already. And it's a case of, again, an element of education, because this is not just a shop where you go and select the cask that you want. It doesn't work that way.
What we try to do in order to facilitate it for our clients is we will open a secondary marketplace, so where they can then kind of trade their shares for a particular cask on the secondary market. So in case someone really needs to exit or wants to trade actively, then he or she can do so.
So liquidity basically is important for users. I think liquidity is important for anyone investing, because it's easy to invest in. It can become difficult to actually recoup your money and make a profit. We've been seeing over the past couple of years, a lot more clients coming back to us on resale. And I have to say, I mean, the feedback has been amazing. We've not seen, don't quote me, but I don't think we've seen any losses, and we've seen very good returns. And more so than anything, everything was done quickly. It was a case of, even a couple of days or a couple of weeks at max, where we've been selling or offering these casks to other investors that were looking at something more mature, something at a higher value, something to be part of a different portfolio that wouldn't suit a different investor. And as a company now, we've got thousands of clients all around the world. And you coming to us to put your cask back onto the market, that means that you have some sort of element of trust to actually be able to facilitate that sale.
That's actually something that really surprised me, because you wouldn't suspect that this market is that liquid, so that you can bring something that's very unique onto the market and that it gets sold or resold so quickly. So that's something that I found really impressive.
And that comes with the quality of stock, more so than anything else, the uniqueness. And of course, with anything unique, you need to have the right market, because something unique doesn't necessarily appeal to everyone, right? So you need to find that right audience, that right investor, which we do in 99.99% of cases. But the good thing with this is that for whatever reason you don't want to go through us, you don't want to sell it through us, it's your asset. It's Splint. It's you guys that have the casks. It's your users that have the cask. Basically, they're owners of those casks. That the sale can be done in any way, shape, or form you see fit.
No, that's very much what we appreciate as well. So it's really in our hands to make a decision when we would love to sell, or what we as well, like if I understood then David, we could even opt to kind of put it into or make a Caribbean cask finish with one of the whiskies.
So that's called a re-racking process. So re-racking means taking the liquid outside of the cask that's currently held in and putting it into a different type of wood, whether that be first fill sherry, whether that be Oloroso, PX, rum, tequila. Now we're seeing some of them, virgin oak, brands like Glenfiddich, Bowmore, Dalmore as well. They do a lot of experiments where they finish liquid into smaller casks. Ale, we're seeing port finishes. We're seeing now apple cider finishes. A very recent experiment. You can become creative, if you are into the bottling business and if you are into the independent bottling markets, you can become creative with that. And that's the beauty with all of this, with the investment in whiskey cask, is that, whether you like it or not, your cask will end up as something being drinkable, something in a bottle form.
Which is really cool.
But unique at the same time, and that's where you always surprise us, because I thought, we learn every day. And I thought, okay, I know whiskey is in whiskey casks.
Yeah.
And then you turned up and you were like, okay, there's whiskey in different
Different
casks.
casks.
So that was amazing. And then it was the gift that keeps on giving.
Yeah.
So
Well, you see it a lot of times. I mean, for example, Macallan, they have a 12-year-old expression finished in 3 different casks, triple wood, matured casks. You have Balvenie, well, we were talking, one of your preferred whiskies, Mario, in Caribbean cask. But we see it more and more often. Is it a case of changing every single liquid into a different re-rack option? Probably not. You need to make sure that you have the right whiskey for that. The most popular re-rack was and is sherry. And that's because it sees somewhere between 15-25% increased ROI on the resale. There's something very appealing to the Asian market specifically, but of course, if you are to buy a sherry cask, it comes at a premium. You can of course sell it at a premium as well.
It's not for free.
It's not for free. It's not for free. No.
Nothing is for free. No, but that's we will then consult David on that. So we'll then ask you to introduce us again to David and see for the different options.
That's the whole point of having the warehouses for our clients to use it. We don't want to have it there empty. Yeah.
And how about the different regions? I was very much surprised when I was reading was it your half-year report which came out recently?
Yes, the latest one is I think is the full year report.
Yes. And then I looked at the different regions and how they performed. So first of all, like all regions performed very well. So
yeah, that's a good sign.
That was already a promising sign for me. But then there were like some regions which really were standing out, like Isla.
Yeah.
Like how comes?
Scarcity and demand, in very, very simple terms. At Isla, you're looking realistically at Kalila, Bunnahabhain, and their expressions like Stoisha, for example, for Bunnahabhain, which is the very peated version. The reason for that, most of the other distilleries don't really release that much stock to the secondary market, or they stopped altogether. Lefroy, they stopped back in 2014, I want to say. Lagavulin, you will never see it, basically. Bruichladdich, you see it very rarely, fairly, well-aged expressions or casks onto the secondary market. Whereas Bunnahabhain and Kalila, you don't see them very often, but when you do, you do have the opportunity to secure some younger casks at a more, I guess, lower entry level points. Having said that, Isla, it does typically perform somewhere around the 16-19%, which is the top performer region as a whole. So of course they do come at a premium, and they sell pretty much instantly. Most of the times, a lot of the very premium stock that we have and the very well or scarce stock that we have typically go to our existing clients. It's very hard for someone new to get into the market and secure an Isla cask from the beginning. Equally, we've been working now for half a year or so, and we've only seen one, I think, Isla cask in the Stoisha in your portfolio. So,
which is great.
And we're looking at adding more Isla into your portfolio. Of course, it takes time again, patience. Yeah, but you are seeing you are seeing options. Lefroy sells sometimes, depending on the age, for 6 figures, but you don't see Lefroy anything young on the secondary market. This is again investors that have purchased back in the 90s, early 2000s, and sitting on that cask for all of these years, and now realizing their returns.
Right.
And that's the beauty. We've got so many suppliers and so many different places where we source our casks, but a big part of our sourcing comes from existing clients that have become suppliers in return.
Who play the exit game and go out and sell one cask and realize, and then someone else is taking over.
Yeah, exactly.
We were talking before about the 40 ABV limit.
40% ABV.
Yeah, exactly. Wasn't there recently this one super old Macallan cask which they found somewhere in a house? which was below 40%, still sold for over $1 million.
Was that a cask or was it a bottle?
It was a cask.
It was a cask.
Yeah.
I don't know if it was under 40%, but basically what they do in that case they need to add Macallan liquid basically into that cask to raise the ABV level. Now remember, the age statement on a bottle or on a cask is the age of the youngest spirit. So what that means is that, let's say you have a 40-year-old Macallan cask that is at 38% ABV, right? It's 40 years of age. Now you need to add something that is older, ideally, or slightly younger because it has a higher ABV. So chances are that you're going to find a higher ABV in a younger cask. So let's say you put a 35-year-old Macallan in the 40-year-old cask, and that 35-year-old Macallan has an ABV of, 48%, right? The cask overall, it will bring the ABV up to 41%, for argument's sake, but instantly you don't have a 40-year-old Macallan, you have a 35-year-old Macallan. Price implication of the difference of price per bottle is significant. So there are ways of managing that, as we talked earlier, with the right temperature, the right humidity, health checks. In case this happens, you can do it, but of course the cost implications will be significant when you talk about a few £1,000s per bottle, so a liquid.
Yeah.
So you got to be careful, basically.
Good to know.
Yeah. I mean, look, it's a good problem. It's a good problem to have. You'll be talking about, $500,000, probably more than that worth of assets. So it is not something bad. Definitely. Now you're seeing a lot of very old expressions. You're seeing 60-year-old Glen Grant bottles. You're seeing 70-odd-year-old. I want to say Dalmore it was. What's happening? I mean, back in the days, 20 years ago, this would be 1 in a million chance. Because of the angel share, you can't expect to keep a cask for that long. So what's happening now is we have more technology as an industry. We have more knowledge about how to mature whiskey. We have more adequate warehousing, facilities where you can control the humidity, the temperature as well, and limit all of that. Because at the end of the day, it's not the same if you have 120 bottles at the end of the cask when you want to bottle that cask, or 150 when the price per bottle is £2,500.
Good to know.
Yeah.
So then we can have our casks in there for the next 50 years.
Yeah. That's the beauty with it. You can decide what you want to do at any given time.
Yeah. No, I really like to see where the industry is going, and especially like those special releases as well on bottles. It's like crazy that you see like a 60-year-old, like a spirit which was in a cask for 60 years, and then you take it out and start to bottle it. That must be something very unique. So I'd love to taste one day 60-year-old whiskey.
I mean, it's not that impressive if you simply look at the label, but if you think about, okay, what time was it? Like 60 years ago, and this survived all the things in between and was stored properly. So I think that's going back to what we're planning for community events, where we would also like to see that our clients experience this history of whiskey, also of our other assets, because there's lots to learn, and it's so interesting and rich.
That's the thing, and you enjoyed the trip to Scotland so much, and you learned so much. Imagine your clients, getting them there, seeing the cask that they've invested in, speaking with Davey, seeing Scotland, going to a distillery tour, understanding how the whiskey is being produced, bottled, casked, go to a cooperage and see how the casks are being made. I mean, this whole industry is trying to keep up with demand, but at the same time is trying to become a little bit more marketable, a little bit more exciting, a little bit more active and seen by new generations, and now you can go in and do, you know, distillery tours. And
I think so. There's so much to market about. You know, with anyone you speak up there, it's basically about whiskey.
Yeah.
At least when you enter as a tourist, so you naturally start to talk about whiskey, and I would say everyone there is just like an expert in whiskey. They have so much to tell about the products. Like even with the cab drivers, you talk about whiskey, and he has like many relatives who are working in the industry, and so he has tons of knowledge, and yeah, if lots of expert talks up there, so it's really impressive. And I think all this knowledge you can market quite well.
Yeah.
Especially the living for that. So it's really an emotional selling story behind it.
It's something symbolic.
Yeah.
We have a lot of clients that are doing this out of passion. They are literally investing because their father, grandfather used to be a master distiller or worked at the distillery. They live across the road from the distillery, and they want to be part of the history.
And one thing you also mentioned, if you have a cask and you decide to bottle it on a special occasion, like for whatever, your anniversary with your wife or your birthday, I mean that's something really great that you can do with those casks.
Very unique. And talking about bottling, as I said, every single cask will end up in bottle form. But because we're trading on the secondary market, there's also a secondary market for bottlings. And that's called an independent bottling company that takes care of actually transferring the liquid from a cask form into bottle form. And then here it's a huge market, and typically you're looking at very, very unique finishes, very unique bottles. Of course, selling most of the times for a premium because of the uniqueness element, but also you can find very interesting expressions, very old expressions in bottlings as well. And you know, you can create something. You know, us as a company, we've created 2 bottlings so far with Braeburn, and of course with Cascade, our sister company, we've got numerous bottlings where you take a cask of the secondary market and you put it into your own glass, into your own label design, box design, and write whatever you want on that. And the important thing here is an independent bottling company, when you purchase that, is to have something unique, something with quality, and something with naming rights, which is very, very important. So naming rights means that when you take an independent bottle, it would have the rights, legal rights to say, you know, let's say Braeburn bottled a bottle of our own, for example, for Tartan Week, a Glengarry 10-year-old. The only reason we're able to say Glengarry there is because when we purchase that cask of the secondary market, that cask has naming rights. And all of the casks that we trade, very, very few exceptions, have naming rights. And that basically, as an investor, at the end of that cask's lifetime, it will have to be bottled, and it will be bottled either by a private investor for a passion project or by an independent bottling company. And for you, as holding something that needs to be well marketed and sellable in 20, 30 years' time, you need to have those naming rights. So everything that you guys have, for example, everything has naming rights. You can write whatever is in that description onto your bottles.
That's really interesting because it's a further proof of quality to our clients.
Yeah. And when you bottle it, then you can see that's the Splint Ben Nevis 2014.
Exactly.
Yeah.
Exactly. Yeah, that's something very important because that creates credibility, and also for the price of resale for that bottle. Without the naming rights, you can't sell it for as big of a premium or as big of a margin as you would with naming rights.
They will be guessing what is in, right?
Exactly. Yeah. They do have, you have special releases with secret Isla malt, and there are, specific hints where, whiskey connoisseur or very big whiskey enthusiasts would realize what liquid's inside. But of course, you as an investor, you want to take that guessing out.
What do you do as a company, when you purchase casks from outside, I assume you as well have due diligence processes on that.
Yeah, of course. So we have well-established list of suppliers that we worked since inception and since the sister company started. I mean, you know, as having a bottling company, an investment company, and 3 e-commerce platforms, people not only know us, but we also know a lot of suppliers. And of course, when we purchase stock, we need to make sure that we know what we're getting. It's quality, it has the right details on it, and it's something that we feel strong that we can sell it, basically, and we can offer it as a strong investment case to all of our investors.
So basically have a similar system that we have. So first it's on the supplier level due diligence, and then as well on the individual asset level where we do the checks.
We get approached by a lot of suppliers and a lot of distilleries directly to basically sell their casks, mainly new distilleries, because as you've seen in the market, the demand is there and is growing. The supply is struggling to keep up with the demand because there's no way of speeding the maturation process. 20-year-old whiskey will take 20 years to make.
I think from an investment perspective, if you look at newer or younger distilleries, it's more risky, I would imagine, right?
It depends on which distillery. It depends on where they position themselves and what they want to achieve and how they position their brand. For example, Annandale, a new distillery that we work with, you've got Annandale as part of your portfolio. They're new, right? We don't typically work with new distilleries because of that element of, I guess, unproven track record. But Annandale, we had the master distiller here sitting on the table speaking with Sam and Jacob a few months ago. And their plans and where they put themselves at the distillery, I mean, it's close to none. We've not seen that happening in the market, especially with new distilleries. But of course, as an overall answer, we always look at heritage. We always look at something that's been producing whiskey for a long time, something that's financially backed by a larger organization, whatever that may be, and something that has, you know, the option and the resources to expand, penetrate new markets, create quality whiskey, is awarded, is sellable, and is traded in large proportions. I think that's important for an investor to know.
Yeah, that's also something we observe not only with whiskey. The bigger brands, people tend to know them better, so they sell easier. But sometimes the interesting investment case from a numbers perspective is not always just with the big names.
Exactly that. Because people need to, like with any other investment, you need to put your emotions aside and look at the numbers, right? You won't invest in a company that you feel very strongly about only because you know someone that works there or you really love their product. You'd invest in them because you believe in their company growth and you see the type of returns that they've been generating, right? So my job is basically to recommend casks that make sense in a numbers point of view rather than in an emotional point of view, unless of course you tell me this is something emotional, this is something romantic, something symbolic for me. That's why it's important to take that aside, look at the numbers, and then invest in the right one.
You'd have made a good auditor, I see.
Yeah. I think I'm enjoying my job so far. I won't change.
It will probably be slightly different, except of the numbers. So. They will remain. Yeah. I was you were mentioning before the point about the maturation process. Then I thought, like, what if someone would be able to speed that process up of the maturation? So that would as well basically be a risk for the industry. And I remembered a article which I stumbled across in the internet, and it was about a company which claims that they can kind of increase the maturation process of the whiskey quite significantly. But the company's out there so that was then comforting me, because I was like starting to panic and thought, oh no, that would like destroy like half of our cases, investment cases, and so I then started to do some research about the company. And so they tried to do that since a decade. So it's not like.
But is it possible? Have they achieved it or
no? Not really.
I don't know how that will work.
But I would also argue that one part, of course, you could speed it up, but is the client still going to be interested in that cask if he knows that the process has been sped up? Because I think a big part of investing in casks is also the history. You know it has really been stored,
it's the brand,
not touched for 20, 40 years.
Yeah, absolutely. The thing is, I mean, even if you needed to speed up the process, I don't know how you would do it. We were talking about, this person taking a cask. It was taking it at higher altitude to basically increase the maturation element. It wasn't whiskey. But anyway, you can't take whiskey casks out of Scotland. You can't. So legally, you can't take them anywhere. So you wouldn't be able to do that anyways. Right. So we've spoken for quite a long time. I think we covered a lot of topics. So thank you both, Lars and Mario, for coming to Barcelona. I think it's not too bad of a trip. And we'll see you again for sure. And we'll see you in Switzerland as well.
Thanks for having us.
Yeah, thanks for having us. And it's basically like when we talk on the phone together, so it always takes longer than expected.
Absolutely.
It's always a pleasure to get
interesting stuff to talk
it's
about.
always always profiting from his knowledge, so always ask him tons of questions. And
good.